How is everyone doing? So this is just a recap of the PM session. From today, as I sat on the charts, I was just reading, kept reading. I was not really doing anything. I was just reading the story. As I decided to watch ICT 2024 mentorship, and I'm following whatever he's telling us to do. I want to really improve. I want to be consistently profitable. So just like you outlined in yesterday's video, I said when we take out this high and we close above, then we might range above here before we go up and create all-time highs. But go back and watch yesterday's video. So today we took out this high. If you watched yesterday's analysis, now today, what's happening is that we had CPI. CPI did not trade our step reading price action. Don't use the 4 hour, I use 1 hour and daily charts. So on the 1 hour time frame, there are things I've observed in price that are quite repetitive. Okay. I told you yesterday that this fair value gap was so important. If we look at that, maybe let me give you something about narrative. The framing narrative for today. Narrative, we want to see how will the daily candle close and how will the daily candle open or close. So because we are in a bullish scenario and we have our higher time frame target, this is our narrative. Narrative is that open. Sorry, let's remove these drawings because I want to teach you something up here. Our narrative is this: open, in a low, high, then close. This is the narrative we are putting forward. We want to see the daily candle unfold before it even starts. This law is either put in Asia or London or even New York. So we cannot tell, but we follow the story of what the market is telling us. Now moving on to 1 hour time frame. This is daily time frame. Narrative is we open this candle right here. Okay, like I told you, we go low, put in a low, and then go high, put in a high, and then close. Right now, we've been selling the daily wick because we understand narrative. And why are we selling? Because we already took out a key point of liquidity. So next target is this one. But you see, we've been exploding up. We need at least one bearish day, go a little bit high. Going on to the 1 hour time frame, what do we see? The 1 hour time frame, we have to look at narrative of this market. Okay. Where is our London session? London session, we know it starts at 3, the silver blade, right here. In this low, because we knew we were bullish, need to see market opens on my indicator. So we see you always have not the daily opening price. Okay. So we opened and put in a low, and put in a low, and then went higher up. Okay? As we will see on the lower time frame. Now what I highlighted here is liquidity levels. You see this, remove this first of all. Removing something which is important. So we have a fair value gap right here, 1 hour time frame, and we know that we are bullish. Okay, this is our fair value gap. Probably the most reactive parts of the fair value gap is the upper half, upper quadrant, lower half, and consequent encroachment. So we see the upper half here. I'm gonna make this for like a bit bold, so for your understanding. Okay, we know that why is this a high probability fair value gap? The high probability fair value gap because let's do this and I tell you in a second. With this black, when we go to the time frame, you should be knowing this why these black lines are here. Okay, they're thick because we come. How do you know a reversal is going to happen? So we put in a swing high right here. Okay, we expect this swing high to be taken out. Now once this swing high is taken out, now you're starting to frame your trade ideas. This is what I go through when I'm looking at price action. Okay, this is like liquidity has been taken out. Now, on the lower time frame, it is so obvious. So here you see that we put in a bullish candle that takes out the swing high, and we put in a bearish candle. And we see this candle here. I talked about this immediate rebalance, close below here, you go short. And we are looking to go short to target this fair value gap that I highlighted right here. Because of the figures, let me just send it further, but it doesn't conflict with anything. So you see wow, how I highlighted my fair value gap. This is our fair value gap, high probability fair value gap. And the things you want to observe in a fair value gap, even on a lower time frame, as we are going to go down and you see, you want price action to come and tap this fair value gap. If the price action is overly bullish, it will not go below this lower quadrant. It will stay in this upper quadrant. When price action stays in this upper quadrant and puts in a bullish candle originating from this fair value gap, then you should know that next day we are going to be buying. Okay, that's why you have to understand what we call what narrative and the versus signatures. Now, because of this after we tap this fair value gap and we create another fair value gap, now the order flow, we can start to read the story that you know what, now it's time to go to buy. And we had our targets right here, our target here, just monthly high. Now we are going to go to the lower time frame and see what happened in this price action in London session. Go down to the lower time frame now. Now, before we go to the lower time frame, you see, uh, you see this high, take it out, and we'll get the rebalance. If we take out this high, the bullish candle will immediately rebalance, we can then start to say that the reversal has started to happen. But for now, we're bullish. Let's go to the 1 minute time frame. When you go to the 1 minute time frame, what do you see? You must follow and you must understand the story, because when you understand this story, you're going to be able to read price action and you're going to enjoy. Now, what happened is that London session, mostly people do not trade London session, but the same concept applies. You always have to just know, if you have these as your key levels, ignore them when you have liquidity and only hunt for it. So that this is liquidity, once it's taken out, expect higher prices. This is liquidity when it's taken out, expect higher prices. If we are bullish, you follow the liquidity concepts, okay? And a swing low, once it is taken out, you expect higher prices. So when you take out this swing low, you don't sell, even because we've broken below this key level of ours. Look for higher prices, because we have our narrative that we're supposed to look for higher prices. And I told you how price action behaves in a fair value gap. First thing, when price hits a fair value gap, okay, I told you that it will put in a swing low and go up, then come and put in another low, go up, come and then take out all the lows it has been put in. But for now, we are looking at the low of the day. The people who want to take the low of the day. So we see that in London session, we took out this, we put in a low, we went higher and higher and higher. How will we know we're not coming back behind here? We got the 1 hour time frame. The 1 hour time frame, we took out when we how did we leave the fair value gap? Okay, at this candle that is leaving that. Put in a bearish candle, failure swing. I think there was SMT here. I am not sure, but I think there's SMT right here, this slope. You check and confirm. Right above here, you know that our target is here, and we are not coming back below here before we, because the price action is overly bullish. It has even failed to reach the lower quadrant of this fair value gap. Now we got the 1 minute time frame. We let the session play out, but it was a good day to trade, because price action literally gave you opportunities. Opportunities, like so many, even if it was CPI day. Yeah, and yesterday, price action has literally been so nice. Now, what happens is that this is the previous day's high. I've forgotten to label it. When you label previous day's high, so important that you always have to keep it on your charts. Okay. This day's high. See when we hit it and immediately it goes above. Going to the 1 minute time frame, this is what we observe. I run my trades. The 1 minute time frame, because we are not involved in price action during this session like London, literally we were not involved. The same, most times what I've observed is that in outside London, price action obeys market structure laws like market structure shift, equilibrium of the range, market structure shift, equilibrium of the range. This is like after London. Market structure shift, equilibrium of the range by like OTE until when we had CPI. I think I looked at the charts today when we had CPI. I was watching price action. We took put in this high. I was watching this week how we use these weeks as also as fair value gaps. This swing high. And I was watching this low of I think we must have had SMT right here. Did not need SMT to trade if I was trading this market. Because we put in a low. Sometimes we want to watch. We take out the high. I was watching and I was like, we take out the high or this high to this level we buy or this high. So we have probabilities. We do not know where price action wants to turn. When you see this signature here, move this. I was watching price. And when you see this consolidation here, remember the market maker, original consolidation. This is when price action is showing you saying that, you know what, I'm about to fly. So position yourselves. This is how the market makers communicate. Communicate with each other and be like, you know what, please get ready. Price is about to leave. So when you see this brief consolidation, 5 minutes consolidation, we called it let him cook. So here, you know what, let him cook for this. Let him cook. You're cooking something, eh? The market makers are positioning themselves from this point up to this point. Now, for you, what you do, just be calm. Immediately see a bearish candle leaving that kind of price action. You can sell, according to what I have learned, you can literally sell this market. But wait, you want better moves. So you look for that inversion after sell side. Mark it as inversion after sell side and wait. Once this sell side is taken, now you're looking for which sell side. Put all these on your charts. Sell side. This is also sell side. If we took this low, CPI low, we didn't, but we must have taken it on and didn't check. We have cooked, we have put in an inversion after sell side. As you see this candle close above this candle, you know there is a breakaway gap here at this level always. This cooking level will always, other market buyers that are so risk averse will just wait for other market makers to move this price action. Now for you long above this price action like this, the stop loss if market has moved safe below this version. This is our reversal signature. Remember I told you. Sell side, booking, inversion after sell side, buy and hold. It is CPI day. Expect a huge movement. I would target up to this level that I had highlighted in yesterday's previous video. If you bought and held of R, as it tells us, look for a low hanging fruit objective. Partial here, if you take 5 contracts here, take off contracts here, take off 2 contracts here, and remain with one to the highest point. This is it, guys. You want to study this price action and the reversal signature. What time is this? 9:30. No, you will not be scared because you know you are bullish. You have a previous day's high here, which is a key level. See, we literally fail to break below this key level. Now you buy. Okay. I want to take you deeper now into the 15 seconds chart. Now this is where there is a story. Market is telling you something. You just have to know the story. Draw the lines and read the story. Trust me, guys. It is so interesting. I cannot wait when I stop tape reading and I start reading immediately. Now there is a story. This story can only be understood by the ICT traders. ICT. That's the story. Now you have to have a 1 minute chart for guidance on one side and 15 seconds chart. Now this is where the story is. Remember I told you there is a inversion after sell side? Yes. Always want to see these wicks in this inversion. Talk about it and keep quiet, leave it there. What do you notice again? You're cooking more. We cook first time, then we cook second time. Put in another inversion. Inversion after what? Sell side. Inversion after sell side. Have you heard of the ICT's Venom model? Rip through. Venom model is like taking out liquidity. So this is another inversion after sell side. But this is not so important, okay? Because this is before 9:30. It opens. Okay, 9:30 rallies up, fails. Break above this inversion. What do you think will happen when we break above this inversion? And we have this confirmation to the market makers who are waiting to buy. Market makers, other market makers, they communicate in this way. To range price, someone with money ranges price. Others, they say when we break above here, that is when we are getting involved. For them, they will come here with the low risk. Intentionally move price so that others can get involved. Now, what ICT teaches us is to look for the first presented fair value gap. Now, it's something I want you to know. At 9:30, you'll always know where is your sell side. This, we are bearish. This week, we will not engulf this. Not of this week, but I was observing price action. Leave it, but you observe it. You see the consequent encroachment of this week. You see how it's acted as a support. I'm looking at this as buy side. At 9:30, you're building the story. You build the narrative, okay? If we are bullish, we want to go low, open low, high close. We want to see price open, seen a low, hit a key level, close, and that's the narrative. Now at 9:30, this is what happens. 9:30 candle is right here. It opens low. Now you see we put in inversion after sell side taken. This is all sell side. Now look at this. It's called the first presented fair value gap after 9:30. Okay. It's all in ICT 2020. It has a volume imbalance. When there is volume imbalance, you want to highlight both the first presented fair value gap with the volume imbalance. Okay. Why? Someone can be stopped out if they have not put this in context. So you have to know this. Taking this fair value gap, there is a small one here. Is ideally the first presented fair value gap. Okay? But if price action is bullish, it's going to be a breakaway gap. Back test and see. First gap, and you want to get into longs, and you're building your conviction. You want to wait for price action to take out liquidity here. You want to wait and observe breakaway gap. We want this fair value gap to remain open. As this candle closes and this candle closes, if we do not return here, now you know that, you know what, action is indeed going up. Immediately we open this candle and put in a volume imbalance. You see, there's a difference between the wick, the body of this candle. This is your entry point. ICT would long this market here At this point, anytime the market returns at this volume imbalance, ICT would go long, and his stop loss is always tight. Now, my experience, I'm learning I'll be putting my stop loss below the key level here because price action can come and tap you out. Hits the key level. As other market makers are waiting where ICT will enter from. Next time, whatever key level is here, whether it is the previous weekly high, previous yearly high, ignore it because price action and narrative are bullish. We are going to disrespect bullish PDRs and we are going to disrespect bearish PDRs and respect bullish PDRs. Okay, so we see put in this here immediately. I would go long here when I see this inversion here. Because above this, I'm going to go with a limit order. So this is always my confirmation for me. When this candle closes, I go long. Because go long. This is 15 seconds chart. Always comes back. So if you have missed, you wait. On 1 minute, you will see that we have a breakaway gap and you have no chance to get involved. And now what you always want to see, price action taps a fair value gap and flies. Now, with this momentum, you just go for margin. Sell the house, sell the car. This is not financial advice. You go full margin. You enjoy. This is for entertainment purposes. So we have engulfing candle after tapping the key level, which is the fair value gap I'm waiting for. We're not coming back below. When we break above this high will act as support for price. Notice how this cooking level is notifying everyone that, you know what, guys, supposed to be buying. Let us buy and go. And we bought. Immediately we bought. Now, imagine you know this and you could hold your emotions. This is it, giving you 9 hours. This is giving you 22 hours if you bought here on 15 seconds chart. Now, I told you about how we use these weeks. This is it, the CPI week. Notice how we take out these sales. I told you every time we take out sales, we always see some retracements. So we wait for this high to be taken out, we'll retrace. Notice how this week is acting as either support or resistance. If we were to go bearish, this is how you know that you are on the right track. Price action would not want even to reach the midpoint of this week. It will just want to come back. But because we are able to feel this week and we are pushing higher, it gives you confidence and momentum. You know what? Let us hold our trade. Now, those who had not entered yet, immediately we close above this week, we come and we test. So this is your decision point now. Look for any SMT around this level. This is sell side, this is sell side. Any SMT and break above. Same thing. This is a cooking level, break above this. Every time we break above a key level, it has support. Just buy and hold. Now, if you missed, yes, I'm here on the 15 seconds chart. I told you every time take liquidity. We wait for this is liquidity. Every time we take liquidity, we always go a bit higher. Since we are buying, we always just want to wait for any form of liquidity to be taken out. And this is a signature for you to go at least higher. Liquidity is taken out, we buy higher. And we missed, we wait, we come back for the PM session. This is when we are looking for our final target. Our final target, New York lunchtime. Now, I was at the charts watching as ICT was telling me. Just watch the story. Now, this is something I can tell you guys. Every time we reach a key level, put in a high, and we take out this high. First high that took out the high, and we failed to close above. We want to read the narrative now. Would this be the high of the day? How would you know that? Take out the high, this candle fails to close above. Next candle, we see this week. How you treat a week is how you treat a fair value gap. We are observing price action. You see price action literally refusing to reach below this week. And the next candle immediately falls below. Next candle tries up, it falls below. We put in another week. Now we need like 3 times to see this momentum. This action comes, fails below. When this candle closes like this, you can go short, trust me, until equilibrium, and you'll get what? A winning trade. Ignore the key level, this one, because you're targeting liquidity. As you understand and incorporate liquidity in these things, that is how we take out liquidity. And we immediately start what? To range or either to trace. This one will give you another trade idea at sessions, and this is a 3 hour. But for me, my stop loss will always be here. It will be a 5 hour. Now, once we have that, now notice what happens, guys. I told you every time we take out liquidity, we want to stop and read the story. Took this liquidity since we are buying. Now me, I was here. We took liquidity. What I did, marked this as inversion, a sell side. I took out this liquidity right here, sell side. I was reading, sell side, my sell side. As we took this liquidity, we look for the inversion. Do we break above? Yes. I told you every time we take liquidity, we can at least know we are going to target next liquidity levels until the key level. If you bought here, by this point, you should be thinking of taking off your profits from our trading strategy. Like this one version, because we have liquidity above, that's why we can be able to see. If we do not have liquidity, we do not get wrong. For this one, I didn't read it. I'm just showing you how you read. At a key level, how will you know that this price action is going to go low? Because in a market situation, we can target to tap this key level. You notice that this candle is bearish. But remember from the start of the video, I told you that immediate rebalance. We hit a key level, we take a sell side, this candle, and we are observing the wick. You are dissecting candle by candle, observing the wick of this candle. We don't want price action to come to this wick or even reach the corresponding point. Immediately, this candle closes, and this candle closes here. The next candle, and go short. How would you go short? Going short because we have sell side below and we have a target to target. Okay, we want to target those people who have not bought so they can buy and we move to gain. But this you should never buy when you don't have sell side. You're targeting or fair value gap or this fair value gap here, where you would go short right here. And now I watched price here. We watched price here come up. So intentions of going up. We're watching price here at this key level. We see these multiple rejections. So multiple rejections, we see this fair value gap, but we see rejection after rejection, rejection after rejection. Like literally the market is undecided. You have to watch the story. Now for you, you would wait. If we are to go bullish, we don't want it to close below here. So this is the first time that tells you know what? Let us kill all the trades we are holding. See how we reject to go below this inversion. That took out this sell side below here. Now we put in another inversion here. Call it inversion after sell side. See how we react. Fail. So now you see this candle here. It comes and immediately breaks above. Fails. Now this candle breaks above this inversion. We'll go long here. And the stop loss. Because we have sell side here, there are chances that we will take out this high and go lower and take out this. So because of how market moves, remember it is the sell side, buy side, sell side, take liquidity, hunt for liquidity. That is why going long right here is risky. Why it is risky? Have to have, you see, if I go long, my stop loss, I want my stop loss to be below here. I'm going long right here. loss is a quite big compared to when we went long here. We went long here because inversion covers us. But here now, this sell side, you can go long just right here after this inversion, and your stop loss should be below this low. If you're bullish, market will not take you up, but sometimes you have to just wait because you know that New York PM session is coming right here at 1:30. 1:30 is at 9:30 volatile. I watched here. I was waiting for 9:30. When this price action closed above here, I told you we put in a value gap here. How to read this value gap? Close above. We're watching price action this week and this week. So this candle, it came deeper and told me price action is not ready to go up. The next action closed above. Now this price action, I saw a volume imbalance here. I said go long. Immediately we went long, went up higher. Now we've taken PM highs. Yeah, I'm reading the story. Okay. Yeah, we have taken this lunch high. The same story that I told you. Inversion after buy side, inversion sell side. What we call sell side, now buy side. Now we are framing short trades. We take buy side, like I told you. You wait for the first high formed to be taken out. Now, notice what happened. Now, I want you to learn how you would call this trade the top. See, we come in a failure swing. We avoided our inversion after buy side. This price action I literally was tape reading it live in this second chart. But traders even reached I think take profit. Oh, it first came and took out everyone again before it reached take profit. So I want you to read these candles. You're seeing this swing high like I told you on the 1 minute time frame. Watch this candle. Either take out this high or fail. Now you watch the bearish candle. First candle. Want to see the second candle, immediate rebalance and close below. Now we want to see the third candle. As the third candle close bullish, means we wait. The third candle, respect this week and close bearish. Enter shorts. I called shorts here. I said let's go short. The first take profit is here. Because we have sell side here, have all this. Now other people will be waiting for this inversion to be taken out. So when we reached here, we tape reading. Now price action came and again put in. We've not taken any sell side here. We're going up. Okay, we've taken this brief sell side. But we're watching price again. We put in this bullish candle. So I was like, okay, we want to just keep going higher. I was reading this fair value gap. You can call it inversion after sell side because the other sell side was also the sell side here. So if we are to go higher, I don't want price action to even fill this gap. I want it to be respected. Notice we are in the midpoint, like market flipped the point of the range, and we reject. The moment we rejected here, I saw this candle. So this is the first bearish candle, immediate rebalance, bullish candle, bearish candle. I said go short. This is why I said go short. Like when this candle closed bearish, said we are going short. Where are we targeting? Because I was looking at forming the daily week. Candle closes, targeting all these highs. So when we reached here, we failed. I know we had reached again another equilibrium of this range from this high to this high. So move from equilibrium to equilibrium. You have to have all this logic. I was watching this inversion, came failed, came lower, up here. When we closed above here, this kind of failed. Like I was observing the same thing again on the 1 minute time frame, 15 seconds time frame. I was literally looking at this fair value gap. We are to go higher. Let's take out this liquidity number. Those will be our targets always, and should not always target the most high. You always stick to just these ones, should always be filled. Watch the price. I want this price action to tap and close above this week. But this candle failed to close above this week. So this shows me that price action is not ready to go up. The next candle came, and when the next candle closed above candle here, okay, it tapped. And I was like, okay, fine, let's go long. Then this happened because you see, it closed above this week. The first case, I was able to call for longs because now this inversion, once we closed above, we saw this rejection. Once this candle closed, I was like, okay, let's go long. Again, price action retraced and deactivated later on. Now, we took buy side because I know we must put in the wick of the daily candle. I watched the first candle, second candle. We put in a fair value gap, watching candle by candle. See how we immediately reject this candle. And we are coming to take even a market structure shift here. This market structure shift and this low will be so important that we want it to act as support for price this week. And watch this week candle. Like there are so many things we can watch. We want to see a breakaway gap. We don't want price to return. When we saw that price didn't want to return up here, and it closed below. Now we have sell side here. This candle went up and closed below. Is what we call immediate rebalance. Immediate rebalance. When this candle closes, I said go short. And we went short, targeting this here. Always your swing lows should be the profit levels. Now here, because we had taken sell side and we had reached inversion, so I think I hurried. I saw this C gap. Then I said we go short to take out this buy side before we could go lower. This was the loss. Then we went and I think this point I stopped trading price action. I was like, you know what? It's enough. And when we had taken out all this sell side, same story applies. I said again, let us cook. I told you about cooking. Yeah, him cook. Let him cook means MMXM guy is coming in now. Original consolidation version. Now when we break above this high, ideally this was supposed to be our bullish signal. I was watching this week. Wasn't ready to go up. Wasn't ready to go up. Because above means we're building the story. Now this one confirmed the story. Market was not the chart, but then I came and had said go long. Go long, you would have taken off your profits here. It came back to this point. Again, I said because we have made equal lows, relative equal lows up here and more lows here. Close above here with this gap, remaining open, go long again. Then we took this low, we retraced here. Again, when we closed above here, so immediate rebalance, go long again. I was like, our final tip is here. So you see why it is so important to always take off something. Because now, your price moves in terms of liquidity. Everyone that had bought here, was taken out. They're taken out. Now price action has reached again the high. Same story here. Fail, not ready to go down. Now when we reach here, because we are bullish, the time is not right. Consolidate above this high. We will bounce back and forth to put in a daily. So if you want to see how to read these things, go and watch ICT 2022 mentorship 2024 and read with him as he teaches us. I am still watching, learning, watching.